and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, June 3rd, 2020, and I am pre-recording this Trading Places Live for Thursday, June 4th. Futures currently are down slightly for Thursday, but we did have another great session on Wednesday, especially on the Dow, the S&P, the small cap, mid caps. Saw a little underperformance on the NASDAQ. It did go higher. But I'm not surprised by that underperformance, and I think that could continue for a while. We'll talk about that in just a bit. I want to go over the agenda before we get started. We're going to start off with that daily market recap, take a look at the Wednesday action. Then we'll move into talking technically. I want to look at the NDX, NASDAQ 100, and talk a little bit about maybe a topping structure taking place here. Also want to talk a little bit about gold and how gold has been underperforming the S&P 500, and I think that continues. I've talked a lot about that in recent days, recent weeks, that I didn't like gold relative to the S&P 500. I think the numbers are starting to bear me out on this one, and I think that's going to continue as the overall U.S. market moves higher, which I believe it will. Then we're going to get into ChartLists. I want to talk a little bit about ChartLists because I think that's one of the best features here at StockCharts. We use it quite a bit over at Earnings Beats. That's where I do all my research and organize all my research and then pass it along to our members at Earnings Beats. So I'll talk a little bit about ChartLists. Got a new segment for you, bullish or bearish? Just a simple question, bullish or bearish? And sometimes fundamentals and technicals don't quite line up right, so stick around for that. Earnings spotlight, got a few companies in the earnings spotlight that I want to talk about. Then we'll wrap the show up with the three you must see. Before I get into any of that, though, I do want to just point you to earningsbeats.com. Would love to have you join as a free Earnings Beats Digest subscriber. If you haven't already, just simply type in your name and email address, hit subscribe. No credit card required. You can unsubscribe at any time. I think you'll find it very useful, very educational. Maybe give you some trading ideas from time to time. Really, I just try to concentrate on earnings, relative strength, stocks that are being accumulated, distributed, that sort of thing. So I think you'll find it very useful. But go to earningsbeats.com, check that out. Let's get into that market recap. Dow Jones Industrial Average. 1 week or a little more than a week taking out 25,000. We take out 26,000. Dow Jones up more than 500 points on Wednesday to 26,269. Huge day, and this configuration is just bullish and getting more bullish every day. The S&P 500 up 42 points, up 1.36% on Wednesday. As I mentioned, NASDAQ still going up. Nothing wrong with the NASDAQ, but on a relative basis, you can see only up a little more than 0.75%, so lagging the Dow and the S&P by quite a bit. Mid caps, small caps, both up very nicely. Mid caps up 2.7%, small caps 3.5%. Huge move, breaking out again on both of these indices. I think things really are starting to look bullish. I think it's just confirming what we've been seeing for weeks in certain areas of the market. Now it seems to be carrying over just about everywhere. Take a look at the sector leaderboard. Now, I think it was on Tuesday we had all 11 sectors go higher. On Wednesday, we had 10 out of 11. Healthcare is definitely consolidating. I still love healthcare going forward, but that was the group that's been leading throughout much of the pandemic, and that group's taking a break. We're seeing money rotate out of that area, maybe a little bit out of technology, out of NASDAQ, and it's going into some other areas in addition to new money coming into the market. So very, very bullish action indeed. But you can see industrials leading up almost 4% on Wednesday. Financials 3.7%. A lot of banks breaking out. 10-year Treasury yield. I'll talk about that in just a minute. But that took a big jump on Wednesday with some better than expected economic news. Energy up nearly 3%. Real estate 2.4%. Materials 2.25%. I mean, the list just goes on. And if you look at every one of these charts, they're all configured very similarly. PPOs are rising, breaking out, printing some new highs. That tells us that the momentum is accelerating. Bullish momentum is accelerating. Price action is moving up above the 20. The 20 is above the 50. They're all rising. I think this configuration in the market is set up to go higher. We're going to pull back at some point. The market's getting overbought, but I don't think that selling is going to last, and I think it'll be an opportunity for those of you who are maybe waiting to get in. I think that next pullback, especially a 20-day test, if we could get one, that is where you want to get in. Problem is, we might go up for several days or a couple weeks, few weeks, before we decide to have a meaningful pullback to test that 20-day moving average. So that's the downside. That's the difficult part of this. 10-year Treasury yield. First, on Wednesday, we had the ADP employment report that came out. We were expecting a loss of 8.66 million jobs. The number was, it's still a big number, but the loss of jobs was only 2.76 million, nowhere near the 8.66 million that the market was looking for. And so, as I was saying and have been saying, the numbers are bad. I'm not going to try and sugarcoat any of these numbers that are coming out. They're horrible. You can look back at any period in history, really, and these are numbers that we just haven't seen in our lifetime. But they're better than expected, and the market is recovering quicker than expected. More and more states, all the states, I think, now have opened. I believe. I'm not quite sure if all of them have, but I think they have. Certainly, there's a lot more business taking place today than there was just a couple of weeks ago, certainly more than a month ago. And the market's pricing all that in. I think the market is saying, hey, we're going right back to where we were. This was a short-term blip. It was a health problem. It was not an economic cycle downturn. It was a out-of-the-blue health concern. And the market is starting to say that health concern is behind us. It is not considering this to be a huge problem going forward. If you think it's going to be, you can take the opposite side of the trade. But right now, you're going to get steamrolled by the bulls, which just continue to push prices higher. The May PMI services, April factory orders, I think May ISM non-manufacturing, all better than expected. Thursday morning, we're going to get initial jobless claims. Last week, we had 2.1 million. We're looking for 1.79 million this week. We'll see how that comes in. Also, quarter one productivity, second estimate will be coming in. The initial estimate came in at minus 2.5%. That's exactly what we're looking for on the second estimate. No change there, minus 2.5%. But check out the 10-year Treasury yield. This is important. If you could go over to YouTube and go to earnings and type in the search box, earningsbeats.com, and you can take a listen to the Trading Places live show that I did there yesterday, or actually earlier today. It's Wednesday. But I went back and showed the relationship between the 10-year Treasury yield and the S&P 500 in bear markets, in true secular bear markets like we had in 2000 to 2002, 2007 to 2009, even the relationship back in 2014 and 2015 and into the early part of 2016. We had all of that back and forth, sideways consolidation. And I showed the difference of what happens in the relationship between the TNX and the SPX during secular bear markets versus secular bull markets. And what's been taking place right now is it's showing the same characteristics that we typically see during a secular bull market in the S&P 500. So this breakout is very, very bullish for equities. And again, if you want to find out more about that, go to YouTube, search earningsbeats.com, and check out my Trading Places live video that I did on Wednesday morning. Okay, let's keep moving. Got a lot to go over here. Talking technically. All right, I'm a big fan of the NASDAQ. I think that this is the index where we're going to see the most earnings growth. But we've come up a lot on this index already. The S&P, the Dow, small caps, mid caps haven't seen this kind of growth. We've seen tremendous outperformance by the NASDAQ 100. We literally went up through the closing high, or the all-time high close, intraday on Wednesday. We hit 97.29. The all-time high close on the NASDAQ 100 was back here in mid-February at 97.18.73. 97.18.73. We were at 97.29.69. So we went through it. We had the breakout, and then we failed into the close. This would be an area where I think the NASDAQ is going to struggle. Definitely, well, nothing's definite, but I believe that it's going to struggle on a relative basis. It really already has. I can show you the chart here. So we topped about 3 weeks ago on the NDX relative to the S&P 500, and we've been going down. So we've been underperforming. but we've still been able to move high enough to test that all-time high. I think we could roll over here on the NASDAQ, and certainly, I would continue to expect short-term underperformance by NASDAQ stocks. That money coming out of these stocks, though, I think is going to help fuel other areas of the market that are just breaking out. And we're going to talk about a number of these in just a minute, but this is a really important chart to watch. The other thing I think is really important, I mentioned gold at the top. Gold is a great hedge when volatility is rising, when the fear is building. When you start to see the fear building, that's the time you want to hedge and have some gold. Because gold, as you look on this chart, you can see the VIX when it was rising. Look at gold relative to the S&P 500. This is when it's going to help your portfolio. When the market is seeing the fear come out of it, like it has for the last 2.5 months, the relative strength of gold goes almost down with the VIX. So wanting to be in gold right now, to me, is simply saying, I'm willing to just give up some returns for a little bit of safety. And if that makes you feel better, then by all means do it. I tend to use a hedge when I believe the stock market is heading into trouble. And so if I was going to do anything with gold, it would have been back in February. Back on February 25th, when the VIX moved up through 20, that's when I wrote to our members at Earnings Beats and said I was moving to cash. I mean, I don't like trading a market where fear is building. I want to trade the market when the fear is coming down. And that's what we've had the last couple of months. So the stock market's been a great place to be since back in mid-March. Gold has not. And I don't think gold is going to be. I've been pretty clear about that for quite some time, and I'm not changing my opinion. Again, if you think that the market is likely to struggle and we're going to have a second wave of COVID-19 and that this rally isn't real, then by all means, you got to take your, make your stands and do what you feel is necessary. But I don't believe that. I think the stock market goes higher, and I personally don't want gold. All right, let's keep moving. How about ChartLists? So I talked a little bit about the chart lists at the top and the fact that I keep various chart lists for our members. And at Earnings Beats, we actually not only keep chart lists, but we allow members who are also members at StockCharts to download our chart list into their StockCharts account. So if you're at least an extra member at StockCharts, you might want to just give us a try. We have a 30-day trial at Earnings Beats. You pay a $7 fee up front, but that gets refunded in 5 to 10 days. And then you can just try for 30 days. If you don't like it, you still get to keep the chart list. They'll be downloaded into your account. But what I'm doing here is actually, let me go back over here first. Let's take a look. I want to bring up the strong earnings chart list and view all. So this is the flagship for us at Earnings Beats. This is where I research earnings reports throughout the quarter, and I'm constantly providing members an updated list. In fact, we just updated this earlier this week, where if a company beats its revenue and its earnings per share estimates, and it's liquid, and it looks fairly healthy on the chart or showing relative strength, then we include it on this chart list. So anything that I find on this chart list, I already know I've got a company that is beating Wall Street estimates, or at least did in the last quarter. And that means a lot to me, being a former practicing CPA. I think it's really important that you not just promise Wall Street, but you actually deliver and outperform what you said you were going to. I like to see the promises low and see performance that comes in above estimates. I want to see the management teams exceed expectations. And so this is a chart list that gives you all that. So strong earnings, I've got, I think on here now, 300, maybe 290 companies, something like that. And so this is a list that I go to quite often. And so I can run scans against it. We also have a scanning strategies page at Earnings Beats where you can literally copy the syntax, go to StockCharts, drop it in to run a scan, and then grab one of these chart lists and run the scan against the chart list. It's the coolest thing. And we're getting a lot of really positive feedback to having both of those on our site at Earnings Beats. But take a look at, some of these stocks that are leading today. I mean, when you pull up, look at, all I did is put this in summary form, and then I can take a look. But AXTI broke out today. So if you take a look at some of the stocks that did the best today and just scroll down the list, start looking at some of the charts, and you can see the charts are also annotated. I have a couple of key areas of support. I probably could put another one in. This one may have gone in prior to this breakout. I'm not really sure when it went in. But here was a breakout level right here. We went back, tested it, and the 20-day, and then turned right back up again. So you got AXTI. I mean, I could go down the list. Actually, let me go back over here. So AXTI was one. How about, I'm just trying to look to see if I recognize any of these that had, MTSI. This is a stock that I really like. This is the Maycom Technology Solutions. Another breakout today. Look at the volume. Highest volume in about a month. We make the breakout. There is a negative divergence in play, but anytime I got a stock breaking out with high volume, I'm not going to worry about that negative divergence unless I see a big reversing candle. Then I'd be a little bit more concerned in the near term. But this is a stock that broke out again today. Then I've got, so that's the strong earnings chart list. Like I said, almost 300 companies on there. Then I've got the short squeeze. I've had a number of members write me here recently doing really well with these short squeeze stocks. So this is a chart list where I've done research, and these are heavily shorted stocks. And when they start breaking out, it can be quite powerful. And one thing that I've noticed here, if I put the sector and industry group up here, take a look today at you see all these stocks. These are the top gainers on this short squeeze. Look at how many of them are discretionary stocks. All of a sudden, discretionary, really over the past few weeks, discretionary has just been exploding to the upside. And a number of these areas, retailers, apparel retailers, clothing and accessories, these are areas of the market that were just kind of thrown out, figuring, okay, they're done. They're never coming back. Well, they're coming back, and they're coming back with a vengeance. So we're finding some of these. And one company I mentioned to our members probably over a week ago was BGFV. This was a breakout back in middle part of May over about $1.35. When you get a breakout like this on this kind of volume, and there's a lot of shorts, you can really make some money from a short squeeze. And look at all this volume that's been pouring in. Shorts, if you're on the short side and you see prices continuing to go up like this, you have unlimited risk to the upside. And so it's just an emotional battle that you have to deal with every day by the amount of money you're going to lose. So these breakouts, when they occur on this chart list, they can really be powerful. Let's see, another one. Let's see. Well, I'll tell you, one I bought today was Wynn Resorts. I've talked a lot about this 90 level. When I saw this stock go through 90 today, I picked it up. If it had closed back below 90, I probably would have just gotten back out, licked my wounds, and waited for another day. But we got the breakout, volume increasing. I know there's a lot of short interest on this stock. It's about, I want to say like 10 or 11% of the short percentage of the float. It's about 10 or 11%, which is not an extraordinarily high number. It's a pretty high number. But Wynn has one of the highest dollar volume shorts in the market. Meaning that if you take the number of shares that are short and multiply it times the current price, $93, it's one of the highest. Tesla is the highest. Tesla's got like 16 billion short, maybe more than that now because the stock's gone up so much more. But Wynn Resorts is a very high one as well. So when I see that breakout, I know I've got the shorts out there. That's when I want to take a shot on some of these stocks that have been underperforming. So I'm actually kind of rotating a little bit away from the NASDAQ, some of the NASDAQ names that have been doing so well during the pandemic. I think they're still going to be great for the future, especially some of those online collaboration companies. Zoom just came out with their earnings on Tuesday night. They were awesome. Stock had another update, pretty big update again on Wednesday. So I still like a lot of those companies, but I think you're now seeing the rest of the market starting to play catch up. And when you get these breakouts, I think you're going to have an opportunity to play a lot of them. They haven't all broken out yet. And the ones that have probably will pull back and give you an opportunity to get in. But anyway, Wynn Resorts looks pretty good to me. Then we've got, let's go take a look at the week AD chart list. Now, this is a chart list of companies that did not look good at all during the pandemic. These were airlines and cruise lines and clothing and accessories and, you know, retail, some of the apparel retailers and those types of companies that really struggled during the pandemic. They are now coming back, and this is why the Dow, the S&P, small caps, mid caps are outperforming right now, because the ones that were beaten down are now, they're getting their turn back to the upside. So you've got some great opportunities on this chart list of, I mean, look at, let me see, which one was it? Well, definitely Signet Jewelers. That was a huge move today. And this is also on the short squeeze chart list, I'm pretty sure, SIG. So you're getting a breakout. Obviously, on a relative basis, this stock had not been doing very well. You know, NASDAQ just hit the February high. You can see this stock is still way below its February high, still only 50% of where it was back in February. Now, I don't know if it's going all the way back there, but I do know it's breaking out, and you got a lot of shorts that are being forced to cover. So any kind of a short-term temporary pullback, I think, is something you want to take a look at. And I'll show you another one, GPS, that broke out. Here was the pullback, but it came back down to the breakout area, held the 20-day, and look at it, just come flying right back up. So there are going to be some tremendous opportunities off these chart lists. So you want to keep an eye on that. All right, another new segment. I'm going to pick up the pace here a little bit, but bullish or bearish? And the reason I want to go through these is these were companies like those weak AD charts. These are companies that just reported earnings, and their earnings were horrible. AEO, American Eagle, they just came out. They had a loss of 84 cents. The market expected a loss of 24 cents. So that was more than triple the loss that Wall Street was expecting. The reaction, we went up 15%. The market said, we've already priced in the worst of the worst, so we don't even care. So this was a sell on the rumor, and now the news is out, and everyone was buying. CMTL, Comtech, Telecom, they were expecting 11-cent loss. Their loss, 16 cents, 50% higher. Stock breaks out on increasing volume. How about Tilly's, TLYS? The stock's been getting hammered, or had been getting hammered. They came out 59-cent loss. The market was expecting 35-cent loss. Horrible report. What's it do? Breaks out on increasing volume. How about Dick's Sporting Goods, DKS? This one may have been out a couple days ago. I think they reported maybe Tuesday morning. But anyway, they were expecting a 50-cent loss. They came in with a loss of $1.21. $1.21. That's a big loss. The stock last 2 days, though, it did go down today, but it's up. It's trending higher. It's been breaking out. Volume's been increasing. How about Cracker Barrel? They were expecting a huge loss, $4.72. They lost $6.81. The stock went down barely. This was 2 days ago. So the stock did react initially to the downside, but it held that rising 20-day. What's it do today? It goes up 11%, breaks out again. So this is what the market is doing. It's now saying, we don't think it's going to be nearly as bad as we originally thought. And even the worst hit stocks are coming back now and breaking out and looking better technically. And I think that's going to help the market move higher. All right, earnings spotlight. Let's take a look at a few companies here. First is GWRE. I was looking at these in after hours. So let me give you an update here and just see where we are. At GWRE, up 5.25%. They did beat easily 9-cent profit. Market was looking for a 6-cent loss. Stock up 5.25% after hours. Looks to me like it's heading back toward that high that we had back in February. How about SMAR, which is Smartsheet? Now, this is an interesting one because Smartsheet came in much better than expected. They were looking for a loss of 20 cents. Came in with a loss of 11 cents. Now, I didn't see guidance, so maybe they guided lower. But stock is down 23.8% after hours, below the 50-day. I mean, we're talking all the way back down here at the 200-day moving average. So this one is getting hit hard after hours. We'll have to see whether or not that continues in the morning. And then the last one I wanted to show you is CLDR. CLDR is down 11.5% after hours. Really interesting. This stock was upgraded, I think, yesterday or the day before. And I never quite understand why an analyst upgrades a stock right before its earnings report. Why not wait and see how the earnings report comes out, how the stock, how the market reacts to the earnings report, and then decide to upgrade or downgrade? I never quite figure that out. Because one of the most important things to me is, I'm looking for a good report. When I see a stock that's done this, gone from 775 to 1250 in about 3 weeks, heading into their earnings report, that's generally going to be a good sign they're coming out with good numbers. They came out with an earnings per share of 5 cents. Market was only looking for 1 cent. So that was a good report, but it's been priced in. We're hitting resistance. Why upgrade right before the earnings report comes out? I think this is going to be a buy on a pullback. Now, whether or not it's a buy at the open or whether you need to see it get down here maybe closer to $10, closer to that 20-day moving average. But I would suspect that when it gets down there, it's going to be a pretty good buy. Oh, I did have one other one I wanted to show you before we wrap up the show. And this is Zura. And ZUO, stock up almost 20% after hours. They came in with a loss of 6 cents. Market was expecting a loss of 10 cents. So better than expected. All the reports that I looked at after hours tonight were better than expected. And up 19%, $15.10. Probably is going to run up to about 16 and a half and going to struggle there. That's what I would be looking for. So I don't think I would chase the gap up. But maybe if it gaps up, pulls back down, fills the gap, or eventually makes the breakout, it'd be much more bullish if it makes the breakout. All right, let's go into the 3 you must see. And for this, yesterday over at Earnings Beats in my Trading Places Live, I think it was yesterday. Maybe it was the last StockCharts TV episode that I did of Trading Places Live. But I looked at 3 Dow stocks, and I'm going to do that again today. I want to look at 3 Dow stocks. First one, McDonald's. Nice breakout. I mean, here you got a big rally. Looks to me like a cup handle. Breakout. The depth of this cup from 190 down to about 166, $24. That measures up to about 214. Oh, by the way, 214 was right where our high was in February. So I think McDonald's looking really good here. JP Morgan makes the breakout. Move down, reaction high, about 103. Move down, come back up here, reaction high, 103, 104. Come back down, move up, reaction high, 103, 104. Very shallow pullback, and then the breakout. Closed above this level. I expect JP Morgan is going to run. If you see the 10-year Treasury yield continue to move up, then I would expect you're going to see JP Morgan and many of the banks continuing to move up as well. I think this could be a great area of the market to keep an eye on and to potentially trade here over the next couple of days, couple of weeks. All right, last one I have, SPG. This is Simon Property Group in the real estate area. Real estate was good. This stock has struggled to get through 70. It managed to do it on Wednesday, closing at 72.88. So Simon Property Group, I think, looks awesome here. Love the breakout. I would expect to see some more gains. All right, as I mentioned, go over to earningsbeats.com. Check out the Earnings Beats Digest or become a member. Get those chart lists downloaded into your account. If you're an extra member at StockCharts, you can do it. Everybody have a great day and rest of the week, and we'll be back to do some more shows next week. Happy trading, everybody.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.